Hello, good afternoon, and welcome to our Key Tax Changes 2022 webinar about key tax changes in the Baltics, organized together with Estonian Chamber of Commerce in Lithuania, to whom we would like to thank you a lot. And today, together with colleagues from Lithuania, Latvia, and Estonia, we will overview what new tax changes are in our three countries, as well as financial advisory colleague Šarūnas in the end will brief about M&A opportunities in the post-pandemic time. So without any further ado, let us begin. My name is Vykintas Valiulis. I am a tax professional in Grand Thornton Baltic Lithuanian office. Together later on, Latvian tax colleagues Martin Šlubgans will present Latvian changes, and Estonian colleague Kristian Järve will brief about Estonian tax changes, and Šarūnas Brazius in the end about financial aspects. So like I said, big thanks to Estonian Chamber of Commerce, and we invite to visit their website if you haven't done so yet. And to begin, a brief introduction, so to speak, into a Baltic context. A question very often received from clients is whether payroll taxation is anyhow different in our countries. Well, it is different, but all in all, if we are looking into the final numbers, to my understanding, the difference is not so big, actually. And here in this table, we marked with green color those configurations that are the most say less costly to employer. For example, if we are aiming to pay net salary of 1,000, then in Estonia the full cost for employer is the lowest. However, even though in Latvia it seems to be the highest, but if we are looking more into detail, then we would see that Latvia has 250 euro tax relief per dependent, per children or some other dependent person, which could actually equalize this total cost to employer. And after that, let's say for a person with 2 children, the total cost for the employer would be the same as in Estonia. If salary net would be 2,000 euro, then still Estonia has the best taxation. But in case a person is earning 3,000 net salary, then in Lithuania the cost is smaller. This table I hope will show you that these tax differences are not so big, and our advice would be to employ persons where you can find them in this time when employees are so difficult to find. Very shortly, a couple of weeks ago, one business partner asked also about Poland, having heard that in Poland it is a very good regime but unfortunately we cannot confirm this. It seems to me that it is very similar to Lithuanian and Latvian and Estonian figures. Of course, maybe depending on industry, if you have this industry with lots of business trips and this business trip regime, it might make sense. But overall, for let's say most of industries, the difference with Poland is not so big, not a very big game changer, so to speak. And in Scandinavia, usually the costs are higher. So as the devil is always in the details, don't hesitate to ask if this is relevant to you. As you can see, such aspects as having dependents, children, might bring completely different results. Slides will be shared with you, and also questions can be posed in the chat. We'll try to answer as much as the time will allow during the, let's say, at the end of the presentation. And now let's move on to key Lithuanian tax changes as known from now. Important to mention that a tax reform is being prepared. Therefore, currently the tax changes are not so significant, but note that the tax reform is upcoming. In corporate taxation, a very important message to businesses working with United Kingdom shareholders or United Kingdom subsidiaries is that at the end of this month, 31st January, the transitional provisions and that were applied after Brexit to the United Kingdom will stop being applied, and UK will be treated no longer as a EU member state, but rather as a third country. Therefore, for dividend taxation, for interest taxation, for royalties taxations, these changes can be important, and double taxation treaty will apply. If you have such configurations, please consult your tax advisor on how specifically this affect your business. Another news is that the requirement for companies to account stock on a FIFO method basis will no longer be applied, and it will be easier for companies to switch to a weighted average or to some other method. Until now, it was possible also to apply some different method, but it required to consult with tax authorities, provide calculations, and usually they would allow to apply some different method, but it was mandatory to consult. And starting from 1st May, it will be no longer required, so this change is very welcome indeed. Some other news is that law on corporate income tax will be updated with the hybrid entities definition and inclusion to tax base of hybrid entities income that was not taxed otherwise. And this change is coming into force as of 1st January next year. So during the whole year 2022, it will be as before. I will not go further into detail as this hybrid entities regime is rather very technical, but know that if in your group there are some entities that are treated as entity from one country's legislation perspective, but from another country's legislation, it is not treated as entity, but rather as transparent and with taxation on shareholder level. Then it is important to analyze how it will change and prepare for this change accordingly. Also, the corporate income tax law was amended with dispositions that in case of a large investment project relief for very large investments, the preferential income tax treatment for income from the use of intellectual property may be applied only to those who actually carry out research and experimental development activities and accordingly receive income from the use of such intellectual property. So again, it is not relevant to all of you, but for very large investments, it can be quite significant. Then, regarding payroll taxation, news which is relevant to almost every company having employees is that new non-taxable income calculation regime was implemented with two formulas, so it was quite complex to those calculating your payroll. But the key message was that without going too much into detail, for gross salaries above 2,864 euro, this is not very much relevant, but for all the other smaller salaries, it is relevant, and your employees and you might notice a slight change in the net amount you receive, even though the salary in your contract is still the same. Another small news is that pension savings scheme was slightly amended, and the contribution rate increases from 2.4 to 2.7, as and no changes for those whose rate already was 3%. Another personal income tax change was that the threshold of progressive income tax was changed, and it is changing every year as it is linked with the average salary. And now, due to inflation, the threshold has risen from 81,000 to 90,000 euro. Some other changes are related with excise duties, as almost every year they are changing, and excise relief was introduced to small brewers as well, and heated tobacco appeared in excise law. So there are some changes relevant to those paying excise duties and those consuming those products, so to speak. Also important to mention, as currently the whole movement to sustainable environment is very high on agenda. As a related measure, also tax for environmental pollution was changed, and packaging fees are indeed rising. And instead of a single tariff that was before, Now different tariffs are set depending on whether the packaging is reusable and recyclable or non-recyclable. So if your company deals with packages, then it is rather important to consult more in detail what is precisely changing. From 1st January 2022, Intrastat reporting thresholds have been also increased. This is probably more important to those filling those reports. Will not linger too much on this news. Let's move on to changes in tax administration in Lithuania. And here, nothing too urgent, but to make you aware, let's say, well in advance, that starting from 2024, payment service providers will be required to collect, store, and provide data on cross-border payment transactions to the tax administrator. And for all taxpayers starting next year, 2023, there will be an obligation to record data of payments for goods and services sold or purchased. These measures were introduced to fight tax fraud, VAT evasion, and it's a part of, let's say, a broader movement to more control in these areas. Another news item that I wanted to share today is that a crowdfunding regulation was adopted at European Union level and is replacing the local crowdfunding legislation. Therefore, starting from 10 November, tax relief for interest earned through this crowdfunding platform, which was available up to 500 euro per year, will be applied if this crowdfunding platform will be matching the new definition of a crowdfunding platform. So hopefully it will be the case, but just wanted to quickly raise your attention about this aspect. And finally, the most important thing I must say, currently tax reform is brewing in Ministry of Finance. There are some rumors maybe about what it will be, because it is not known what precise measures will be proposed to the Parliament. But from the information we hear publicly from the Ministry of Finance, their intention is to publish the draft in the first half of this year, hopefully in the spring session. But the goal is to prepare entry into force of new measures starting the next year, 2023. Expected changes are that the real estate tax base will be very likely to expand it, and we hear that maybe it will be applicable to all taxpayers without exception. Hopefully then some exemptions still be existing, but draft is not public yet. Another aspect that seems to be high on the agenda is to increase the tax burden on self-employed persons. We will see how it will be implemented, but most likely it will increase to some extent. And finally, from this information we hear is that some income tax, some personal income tax and corporate income tax and similar tax reliefs will be very likely to be eliminated or reduced. As in the beginning, this tax reform was presented as a review of tax reliefs. We saw that in the meantime, new tax relief on food services was introduced in mid this year due to probably a better financial situation than prior to COVID pandemic. But anyhow, our let's say forecast would be that some tax reliefs will have to fall. And please subscribe to our newsletter, as we will send a tax alert whenever this draft tax reform will be made public. So indeed, you will be able not to miss this important change in the Lithuanian tax landscape. So that's all from my end, from Lithuanian end. And now I would like to invite my Latvian colleague Mārtiņš to present on changes in Latvia. Mārtiņš, please. I wanted to say the floor is yours, but maybe the microphone is yours. Please.
Thank you, Vikintas. So my name is Mārtiņš Lubgans. I'm representing tax department from Thornton, Latvia, and I will introduce you with the most significant changes in 2022. There are not a lot of them, but some of them is useful for most of the companies. So we can start with the next slide. And the first is corporate income tax, which is probably the most significant change. I will tell about the background. So in Latvia, we have fin capitalization rules that apply to interest payments exceeding a specified amount, and the excess interest calculated for the debt financing exceeding debt to equity ratio of 4:1, and previously it was subject to corporate income tax. However, in 2021 and 2022, the excess interest payments will not be subject to corporate income tax and fin capitalization rules, and therefore increased interest payments in 2021 and 2022 may be included in operating expenses to full extent. These provisions do not apply for if interest payments exceeds 3 million euros per year, and then fin capitalization rules is still applicable. So as today is the final day for the submission of last corporate income tax for those who have included increased corporate income tax increased interest payments, it can be excluded, and no corporate income tax to be calculated. Then we can move on to the next slide. So there are changes regarding social security contributions. The first is related with the sick leaves. As of 1st April, the sick leave will be paid from the 10th day of incapacity to work. Currently, it is from 11th day. The next one is related with the maximum object of social security contributions, and starting from 1st January 2022, social security contributions has to be paid up to 78,100 euros per year. Previously, last year, it was 62,800 euros. And said changes affects also personal income tax, as we have a progressive personal income tax system in Latvia. We have rates of 20, 23, and 31%. And a rate of 31% is applied to income in excess of the maximum object of social security contributions. So starting from the 1st January 22, personal income tax rate of 31% will be applied to yearly income that exceeds 78,100 euros. Then additionally, if you are talking about personal income tax, there is a changes in maximum non-taxable minimum from 1st January 2022 to 30 June 2022. The maximum non-taxable minimum will be 350 euros per month. And from 1st July 2022, those will be 500 euros per month. As we in Latvia have a differential non-taxable minimum, it is applied proportionally up to the income not exceeding 1,800 euros, meaning that the maximum amount of non-taxable minimum will be applied to income of 500 euros. That is a minimal salary in Latvia. And zero non-taxable minimum will be applied to income from 1,801 euro. There we see as well a formula how the non-taxable minimum is being calculated, and as it is as this formula is not so simple and calculations is not so simple, tax authorities does the forecast of non-taxable minimum based on employees' income. And this forecast is available in electronic declaration system of tax authorities. Then we have a special tax regime for royalties, which is extended until 31st December 2022. And from 1st January 2022, there are two additional exemptions from personal income tax. So until the 1st January 2022, employer had a possibility to cover catering expenses for the employee. Those were up to 480 euros per year per one employee. And starting from 1st January 2022, together with catering expenses, employer has a possibility to cover medical expenses. And both combined cannot per year per employee. And the important thing is that these expenses are exempt from personal income tax only if collective agreement is in place. Then there is a similar exemption as in previous year, which is related to COVID-19. The employees' expenses related to teleoperation or remote work up to 30 euros per month will be non-taxable from a personal income tax perspective. Then we can move on to the next slide. So there is two most significant changes in value-added tax. From the 1st January 2022, we have 5% VAT rate, which is applicable to supply of books, press, and other mass media or publications that is issued in printed form or electronical form. And there will be another changes regarding compulsory lease. That no VAT will be applied on rental payments where the land and the buildings belong to different owners. Yes, and then we can move forward to my last slide. This is other changes. There are more other changes than those two, but those seem more significant. And the first is changes in excess duties, which is increased excess duty for cigarettes, tobacco products, and sweetened drinks. And then there is changes in natural resource tax that as of 1st February 2022, introduction of mandatory deposit system for the reusable and disposable beverage packaging will take place. And there will be an option to apply for exemption from natural resource tax. However, certain criteria, conditions will have to be fulfilled. And reusable beverage packaging will not be subject to value-added tax, which means that if the beverage is packaged in reusable packaging, VAT will only apply to the beverage and not to the packaging. So shortly, this is it from my side, and I give word to my colleague from Estonia, Christian.
Yeah. Good afternoon, everyone. I hope you hear me well. As already introduced, my name is Kristjan Järve, and I'm head of tax in Estonia. And as our time frame is tight, let's jump to Estonian key changes. Vikindas, next slide, please. Thank you. From this year, the VAT can be finally recovered from the bad debts in Estonia. This is a quite long-awaited addition to Estonian VAT system, which has been in progress before in many times, but without success so far. The basis for adjusting the VAT liability is the bad debt that has been written off in accounting. Unlike doubtful receivables, the internal accounting rules may not much regulate the writing of a bad debt and may not be fully in the line of the VAT requirements. For instance, we have noticed the write-offs only on the assumption that the claim has been outstanding more than 12 months, which is okay for accounting purposes, as the correction in balance sheet has occurred before anyway, but not enough to justify the VAT recovery. So what is needed? Before writing off a claim, a taxable person must do everything in his power to collect the claim. If it turns out that despite the efforts of that person, it's not possible to collect the claim because, for example, the debtor has been liquidated, or the cost of collecting the claim exceeds the expected income from the collection, the claim can be written off and VAT adjusted accordingly. The law applies to the claims that have been written off due to the buyer's insolvency, which means a situation where the buyer has disputed the quality of the goods or services and just refuses to pay the invoice is not basis for writing off the claim within the meaning of the VAT law. The amendment allows to adjust the VAT liability only for receivables written off from 1st of January 2020. And you can see certain specific additional conditions here. Let's go to the next slide, please. We have special provisions which apply to receivables above 30,000 euros, including VAT. Such claims are not subject to the 12 months time limit, which is good. However, the VAT on such receivables can be only reclaimed based on a court decision. Any enforcement document proving the existence and hopelessness of a claim, like an order for payment or an order terminating bankruptcy proceedings, can be considered a court decision here. We have a notification requirement. The taxable person must notify the debtor in writing that the claim has been written off, having done everything possible to collect the claim in advance. Only then the taxpayer can adjust the VAT. And the debtor who receives a notification and has deducted input VAT in advance he is obliged to adjust the input VAT during the month of the receipt of such notification. It means the same period. But regardless whether the debtor has done that or not, like maybe they can't do it if they are liquidated, for instance, then the taxpayer has still right to recover the VAT on such bad debt. So next slide, please. This amendment follows the European Court of Justice judgment, which interprets the directive in a way that member states exempt from VAT only such transport services which are directly linked to the importation or exportation of goods and which are provided directly to a consignor or consignee. In other words, transport services provided by the transport companies to freight forwarders are now taxed at a standard 20% rate. And also the taxable value of imported goods via transit from another member state must be now included transportation cost as well. So I think we can move forward to the income tax changes. Yes, thank you. Firstly, about the updated TP documentation requirements, which are updated and brought into the line with many recent developments in the OECD guidelines. Methodology has not changed, and the topics and structure have remained also same, but the level of detail of requirements has increased quite a lot, so that the third party, like tax auditor or external auditor, can better understand the context than reading the documentation, which probably will also increase the time spent, of course, of preparing the TP documentation. About inter-quarter range, which is very obvious for the TP specialist, not much to others. Basically, not all comparable transactions have the same degree of comparability. If it can be determined that certain uncontrolled transactions have a lower degree of comparability than others, they should be excluded from the analysis. If a large number of factors are taken into account when compiling the range of results for the reference data, statistics that take into account a central trend, so-called inter-quarter range, should improve the reliability of the analysis. So that's the background. About low value-added services, what are the assumptions? Firstly, a supportive nature, not part of a core business of M&A group, does not require the use of unique valuable intangible asset, nor lead creation of such asset, and does not pose a significant risk to the service provider. The typical low value-added services are accounting, staff recruitment, training, internal external communication, public relation, legal services, general administration. However, research and development, production services, sales and marketing activities, financial services, for example, does not meet the definition of a low value-added services. And please note that this safe harbor, this 5% markup, is an option, not requirement. So the taxpayer always has an opportunity still to perform the benchmarking analysis if they would like to add the lower markup. But in case of a low value-added services, that would decrease the red tape, because in Estonia it's not required to have a special benchmarking study for a markup. About IP, when conducting a comparability analysis, it may be also important to consider the stage of development of intangible asset useful life. The rights to upgrade and renew the intangible asset may also have a material effect on the revenue and profit, which should be taken into account. About detailed benchmarking, about the detailed benchmarking criteria for the financial transactions, for instance, existence of a fixed repayment period, obligation to pay interest, of course, the existence of a loan agreement and collateral, source of interest payment, ability of a borrower to obtain the loan from an unrelated credit institutions, and the purpose of a loan. So nothing directly new that the taxpayer or advisor should take into account when determining the market price. But now, no more shortcuts in documentation, and the consideration of all of those mandatory criteria may also actually affect the range of a fair market value. And maybe finally, the comparative data is now, it is stated, it's valid up to the 3 years if the terms of the tested transactions have not changed. That's also good to know. Before, it actually worked in practice, but now it is stated. Let's move forward to the next slide. About tax haven regulation. In the past, we had fairly complex tests in order to determine whether the foreign client or supplier was from so-called low tax territory. And in the latter case, different type of payments, example, granting loans or payments for services were automatically reclassified as a hidden profit distribution, and those subject of 25% corporate tax on the net payments. Now, the tax implications have remained exactly the same, but the definition of such foreign counterparties has become much more simpler, but also less flexible. We have now just a complete list, which currently contains no typical jurisdictions with whom taxpayers in our region should do business, like American Samoa, Fiji, Guam, Samoa, but also Panama. So yeah, in that case, the taxpayer should be very careful, because regardless of actual situation, those entities from these jurisdictions will be treated always as a tax haven entities with actual tax implication. And the other changes, please. I think the first point is important, especially for those responsible for the cash flow planning. The past 2 years were quite favorable for the taxpayers to agree payment schedules with the tax authorities, as a minimum effective rate interest was 0%. So it was a lucrative cash flow instrument used by many taxpayers in Estonia. But now the good times are over. The maximum annual effective rate is now back again, approximately 27%. You should note that the paid default interest rate is also subject of a corporate tax. And the minimum rate is about 13–14% in case of agreed payment schedule with authorities. So not particularly cheap source of working capital. And we have here also a few potential changes for individuals. So that's shortly all on my part. Thanks for bearing with me, and I will also give a microphone now over to our Lithuanian M&E expert, Šarūnas.
Thank you all. So hello, dear audience. My name is Šarūnas, and I'm leading financial business advisory at Thornton, Lithuania. And I want to thank my colleagues for tax updates, and I would like to make slight turn and talk a little about possibilities in post-pandemic world. We are now living in uncertain times, which also brings us a lot of possibilities. Therefore, I will talk about mergers and acquisitions. I will start from global figures, as we are all part of global ecosystem. Global deal making is set to maintain the scorching pace next year after a historic year for merger and acquisition activity that was fueled largely by easily availability of cheap financing and booming stock markets. So global M&A volume topped $5 trillion for the first time ever, which was higher than previous record of 4.5 trillion set in back in 2007. The overall value of M&A stood at $5.8 trillion in 2021, which was up 64% from a year earlier, according to some sources. Flushed with cash and encouraged by soaring stock markets valuation, large buyout funds, corporates, and financiers struck over 62,000 deals worldwide in 2021, which was up 24% from a year earlier period. Moving to Lithuanian figures. So after brief global review, let's move on to the Lithuanian transaction market. The mergers and acquisitions market was at a record high in 2021. And one of its main engines was the ambition to expand its existing businesses and enter new technologies. Without going into detailed statistics, the number or value of transactions provided by merger market, we can see that the statistics are about twice as good as in 2020, which was also not a bad year. With this year was exceptional and record-breaking not only in Lithuania or Baltic states, but also all over the world. So I would say the main factor in this activity was economic growth. Companies make acquisition because they want to expand to other countries or seek to acquire a new company because of other technology they have. Another reason for the activity of transactions is economic stimulus programs run by the governments and central banks as a result of the pandemic, which have injected markets with additional money. So now the mass of money is such that it allows to pay higher prices for the business sold, and it is clear that the risk of monetary depreciation also stimulates the transaction market, which with buyers paying more and sellers taking advantage of the situation and selling businesses. Moving to the next slide, it can be stressed out that if one or more sectors were previously dominant in the acquisition market, transactions are now recorded in almost all sectors, both in new technologies and in traditional economic sectors. The rank of investors have increased, and more target companies that can be bought in Baltics region have appeared. It is worth to mention some exclusive deals in 2021. Let's move to the next slide. We can talk a little bit about the Linas Agro Group, KG Group, and Thornton and Aviva. Linas Agro Group, an agricultural, and both KG Group, an agricultural processing and food production group, was acquired for 140 million euros. Speaking about foreign capital investments, so two US-based investment management companies made 300 million euros investment in the capital of the aviation business group, Avia Solutions Group. Finnish energy company Thornton has signed an agreement to sell its centralized heating business in the Baltics to Partners Group for 800 million euros. Although no one has deducted the Lithuania here, its value should reach at least 100 million euros. And another deal with an alliance, one of the world's largest insurance group, acquired the companies of the British life insurance group Aviva in Lithuania and Poland for 2.7 trillion euros. So moving to the next slide. Year 2022, what could we expect? So general expectation that 2022 is expected to be better than 2021. This year, even having in mind the geopolitical risks due to economic conflicts with China and Belarus, the transaction market in Lithuania is expected to grow. On the other hand, the biggest risk to the transaction market next year will be related to the same geopolitical factors, followed by elevated corporate valuations. Investments are made in anticipation of returns, so any uncertainties that affect returns may result in a decision not to invest. So if there is no, yes, so we have to have the disclosure here. We can use word if. So if there is no further escalation and conflicts do not increase and tensions are managed, there should be no significant impact, and as all macroeconomic indicators in Lithuania are growing, and this market is attractive for investment. So potential investors are optimistic about upcoming next year, at least for now. So according to some surveys, 46% of respondents believe that activity of the transaction market will continue to grow this year, and 42% that it will remain at the same level. What sectors are most preferable for investors? We are a bit too far, yes. As we have earlier mentioned, there is no dominant sector, but investors are now interested mostly in technologies, fintech, finance, food production, and green economy sectors. The planned further consolidation of the private healthcare sector is still noteworthy, with several players already emerging who are doing so quite successfully, such as Medica and Medica. And the country's meat and dairy industry is already largely consolidated, so potential acquisitions in this market could be encouraged only by neighbors. And so we could see a shift here in the long discussed sale of the Latvian dairy giant Food Union took place, and if it were purchased by a large private investor, it would be very logical to start looking at Lithuania as well. One other thing worth to mention, also we expect that during the next decade, market will be affected by generational change. Owners of the companies which were founded 20 or more years ago are typically already thinking about realizing value. So there's a lot of interesting companies that will be available to invest in. Joining financial or strategic investor, possibly leading active management, reducing risk, and increasing liquidity are options that many entrepreneurs in the early days of independence are considering now. Let's move forward. So we at the Grand Thornton, we are, I would say we are fast, reliable, and hands-on professionals proposing solutions for your businesses. And we are ready to assist in any questions helping to increase your business value. So we have a network which operates in almost 140 countries, and we are ready to help you in any question which arises. We could help you, we can assist you, your companies doing M&A transactions, help you to prepare your company for the sale, and represent your company throughout the sale transaction. Well, it is also worth mentioning that we are providing accounting, audit, tax, legal, and business advisory services. So please do not hesitate to contact us, and we would be more than happy to assist you in any question. And we are looking forward to hearing from you. Yes, and Vykintas, colleagues, perhaps you would like to summarize the event.
Thank you, Martin, Christian, and Šarūnas. Big thanks to you all. In the slides, you will be able to see our contacts. Please do not hesitate to contact. The slides will be shared with you, as well as a recording of this event. And I saw that a couple of questions were posed in the chat. I don't know whether it will be possible to answer on the spot. Christian, do you see the question from Bob? about updates in Estonia regarding tax and especially VAT treatment of in-game assets.
Yeah, I see. Well, yeah, the first one about the VAT. I think we have to look this at greater details. However, is that can be somehow treated as a sale of crypto asset, but I'm afraid that most probably the Estonian tax authorities will treat that as a part of platform service, which means that and electronic service. And in that case, the VAT treatment depends on the client. If it's a domestic Estonian client, is it EU client? In that case, the one-stop shop may apply. Is it with a VAT payer? Is it non-EU client? In that case, it does not create any problem. It will be automatically 0%. So yeah, I'm not very certain that this can be treated as a VAT exempt sale of a cryptocurrency in particular situation. But we can look at greater details later. About the minimum, global minimum tax. Well, that's very new thing. A lot of negotiations. You have heard probably Estonia has not approved the EU proposal. So, but in principle, of course, the Estonian corporate tax, 20% on the cross distribution is clearly above the 15%, but the problem is the deferred taxation. I know that the Estonian Minister of Finance would have been in discussion with OECD and the European Union also, and they would like to agree the special 4 years transition period or 4 years deadline during which time the postponed deferred system will still work, and later, if still the local Estonian subsidiary of big M&A has not decided to distribute the dividends, and then the global minimum tax at the parent level may apply. But I think we don't have a final directive even yet. I think also no local piece of law. So I think we know much more within next few months. And I would recommend we will have an international tax trend seminar soon at the end of March, Nordic Baltic. So please take part of this who are interested about that, because these trends, including especially the global minimum tax, will be one of the focus in this webinar. And I would also encourage you to visit our local websites, the English version websites in Estonia, Latvia, Lithuania, because we have also just finished and uploaded the nice key tax changes update brochure, and you can also find the local tax contacts. That's all from my side.
Okay, big thanks, Christian. And if there are no new other additional questions, then thank you all, and let's wish you all a good evening, and we will be waiting for you in our next Nordic Baltic tax trends event. And please contact us until then if you would see that we can help with your challenges your organization is facing. So good evening to you all, and let's stay in touch.